As we bid farewell to 2022, we reflect on one of the most tumultuous years that financial markets have experienced in recent history. The global economy navigated through an array of challenges, from the post-COVID slump, the war between Ukraine and Russia, the energy crisis, and an ongoing cost of living crisis, to the harshest swing in monetary policy most people have ever witnessed. It's incredible to fathom that all these events happen within a span of just 12 months. As we usher in 2023, we brace ourselves for what some financial experts are calling the new regime. A financial world characterized by high interest rates and lower growth rates. Undoubtedly, this is a challenging climate for investors. Nevertheless, we are all in the same boat. In such challenging times, being an investor requires more effort than ever. The tough macroeconomic conditions make selecting high-quality companies all the more important, especially with no safety net of a long bull run to lift equity valuations. While it's always advisable to do your own research and draw your own conclusions, it helps to look up to experienced investors and learn from them what they look for in the companies they invest in. That's why this video takes a closer look at the top 3 most bought stocks among super investors in Q4, with the aim of provoking some thoughts on the reasoning behind these purchases as we move further into 2023. By studying the companies that the super investors are putting their money into, we can gain insights into what sets these companies apart and what makes them worth investing in. This is the Bullish Aristocrat. And in this channel I would like to share my investing journey, and give you all the tips and advice I wish I knew when I first started investing. So if you find that interesting, then please subscribe to the channel and like this video to help support us in reaching more people. Make sure to press the notification button to stay up to date with new videos that will be uploaded. Let's take a deep dive into the first company on our list, Google's Alphabet stock. Brace yourself, because we're about to uncover some intriguing insights. First of all, Google was the most sought-after stock among super investors in the final quarter of 2022. With 21 of them investing in both Class A and Class C shares. The largest purchase was made by Dodge & Cox, who added a whopping 3,015,700 new shares to their portfolio. But here's the kicker. Google's stock value actually declined during Q4, and even as we enter March, it hasn't recovered much. Despite being involved in a myriad of businesses such as Google Maps, Google Play Store, and Google Cloud Computing Services, Google still generates most of its profits from advertising on its search engine and YouTube. However, like Facebook, Google is grappling with reduced advertising expenditure due to the tough macroeconomic climate. The usual advertisers that Google relies on for business are cutting back on advertising expenses, which is negatively impacting their bottom line. The Q4 financials revealed that advertising revenue shrunk year over year, which is quite rare. This is a stark contrast to the 20 to 30% revenue growth that we're accustomed to seeing. On top of that, Google's headcount grew from 156,000 to 190,000 by the end of 2022. While this may seem like a positive, it's important to consider this in the context of declining advertising revenue. The headcount growth may be unsustainable if the trend doesn't reverse. It's worth noting that several tech giants have announced layoffs in the recent past. However, some of them still have higher headcounts compared to last year despite reduced personnel. Fortunately, Google is in a much better financial position, thanks to its rock-solid moat and impressive balance sheet. With $113 billion in cash or short-term marketable securities, Google is a financial fortress, especially when you consider their long-term debt of $13 billion and total liabilities of only $109 billion. In short, Google's stock may have faced some challenges during Q4, but the company's impressive financial standing and resilient moat make it a solid investment option for super investors. The second hottest stock among super investors in Q4 was Amazon. Amazon, the online retail and web services giant, remains a top choice among super investors in Q4 of 2022. 15 of the world's most prominent investors, including Chase Coleman at Tiger Asset Management, acquired a significant amount of Amazon shares, increasing their portfolio's holdings by 221%. Although the stock price hasn't recovered as well as some of the other stocks in this list, the super investors who timed the market well with their Q4 buys could potentially see a return of up to 16% since then. However, why is Amazon still down while the market has shown a stronger recovery? The spending appetite of the average consumer heavily depends on Amazon's business. When lockdowns started and stimulus checks were handed out, Amazon thrived, but when disposable income drops, inflation spikes, and costs rise, Amazon struggles, and consumer spending takes a while to recover. Furthermore, Amazon invested heavily in their business over the past few years to expand and accommodate the level of demand from 2020 and 2021. They spent over $60 billion in the last year, but this has resulted in a big drop-off in consumer spending, making life a lot more difficult for Amazon. Despite the challenges in their retail side, Amazon's growth engine, Amazon Web Services, AWS, is chugging along nicely for them. AWS reported a 29% sales growth across the year to $80.1 billion, securing lucrative service contracts from Nasdaq, Yahoo Ad Tech, and Brookfield Asset Management. These successes in their web services segment highlight that there are still positives for Amazon, even in this environment. The third and final stock to discuss today is Meta. Social media conglomerate Meta, formerly known as Facebook, was the third most popular stock among super investors in Q4, with 13 of the world's most astute investors seeing potential in the previously downtrodden company. Despite sinking to a 52-week low of $88.09 per share, Meta has made a spectacular recovery, shooting up over 108% since its November lows to sit practically level with the stock prices seen in early March of 2022. So, if our super investors were buying heavily in November, they're now sitting pretty with the stock currently trading at just over $185 per share just a few months later. However, even with the reversal of fortunes, Meta still faces a lot of headwinds. CEO Mark Zuckerberg's commitment to his metaverse VR/AR project has led to significant losses for the company, with Reality Labs reporting losses of $3.7 billion in Q3 of last year and $4.3 billion in Q4. Additionally, Meta's annual capital expenditures in 2022 hit $32 billion, up from $19.2 billion the year before, with little to show for it yet. Moreover, the current macroeconomic environment has hit Meta hard, with advertisers pulling back on marketing budgets, reducing the company's revenue growth to only 4% in 2022. The shift in content consumption towards short-form video, which is difficult for Meta to monetize, has also contributed to the fall in revenue growth. Despite these short-term headwinds, the long-term focused super investors remain undeterred, buying up shares in Q4 and potentially reaping the rewards in the future. In conclusion, the three most popular stocks among super investors in Q4 were Google, Amazon, and Meta. While each company has faced its own set of challenges, investors saw potential in their long-term growth prospects and made significant purchases. Only time will tell how these investments will ultimately perform, but for now, these stocks remain hot picks for the world's most astute investors. Thank you so much for watching this video till the end. If you found it at all helpful, then please hit that like button and subscribe to the channel to always be up to date with new videos that will be posted weekly.